Okay, let me click that to accept it. Okay, which we'll talk a little bit more about score towards the end. In this presentation, I actually put together more for teaching engineers how to read balance sheets, because engineers are not accountants, but yet they still need to know and understand how accounting and stuff works. So it's not meant to be an accounting class. It's meant to be understanding financial statements without being an accountant. And now here with Ronisha and Christy, both of you are basically an accountant background. So you'll probably find it's overly simplified, but please jump in if there's anything you want to discuss. Please just unmute yourself, jump in. I'd love to have it more of a two-way conversation. What I'd like to do is start off with, let's just start to think of your business as a tree. We all know we love trees. Let's say it's a fruit-bearing tree, like an apple tree. So this is our business. We get this big, beautiful apple tree. Then we have an income statement. It measures the fruits of our business. Okay, our business, apples. So the income statement is going to say, how many apples do we get this year? Or in our business, how many dollars do we get? How many apples came in? How many dollars came in? And like a tree, the business is going to produce an annual yield. So at the end of this season, we know how many apples. At the end of the year, we know how many dollars our business brought in. And just like an apple tree, every year it gets reset. We know an apple tree goes through its seasons, from spring to summer to fall to winter. Our business is going through this, and every year it goes back and repeats itself. So our income statement's going to be basically reset every year. So we start at zero at the beginning of every year. And then we want to measure what's the yield for that year. Okay. So we look at an income statement. An income statement, sometimes called a P&L statement. You hear all different words for it, but basically it's going to be basically what our income and stuff is going to be. I'm going to use for an example for today's talk of a wine shop. I figure here in the middle of the pandemic, wine's been top of our mind. Basically, we've been consuming quite a bit of it. So a simple wine shop. Our wine sales, we did $350,000 worth of wine. It means everybody who came in this year and bought wine, this is the total of all the money that we brought in. Now, I had to buy the wine. So the cost of wine sold. So I went to the different vineyards and I bought the wine from them. So I spent $187,500 for the wine and then sold it for $350,000. So again, this is important to know. This is how much I sold it for. This is what it cost me. Cost of the wine sold. So my gross profit was $162,500. Okay. Again, I looked at what I paid for it, what I sold it for. Now, if I made it, and then instead of cost of wine sold, could be cost of goods sold. And then I could show my labor, material, overhead it took me to make it. But it's the same concept. What did it cost me to buy? Or what did it cost me to make? What did I sell it for? And this is what people call above the line. And for those of us who love watching Shark Tank, what's the first thing they always ask you? What's your gross margin? And this is what they want to see. What did it cost you? What did you sell it for? This is the first indicating of our business. And then once we have this, our gross profit, now we want to look at what's it cost to operate our business. We got sales commissions, marketing, wages, rent, utilities, everything for operating the business. In our wine shop, it cost us $148,600 to operate the business. So we had a gross profit of $162,500, operating expenses of $148,600. So our operating income is $13,900. Okay, kind of makes sense of how we're working down. This is now our operating income. And here we have a little bit of interest expense, a little bit of other income, which could be various other miscellaneous type things. And then we get our total income before taxes. Okay. And one partner we always have in business. And Christy, I'm going to ask you, who's your silent partner in your business?
Would it be myself?
Well, no, you're not silent. Who's your silent partner? Who's sitting on your shoulder watching everything you do? And he wants a piece
I
of
guess
it.
would it be my investor?
Oh, somebody
Oh no,
meaner
you
than
said,
that.
oh no. You talking about Uncle Sam.
Uncle Sam, absolutely.
Oh, I'm sorry.
Uncle Sam is your silent partner in everything you
Yes.
do. So you got $14,900. He wants $3,900 of that. And he's gonna make sure he gets it, okay? So after that, let me get caught up here in my slides. So we got our departments, and now we get to the bottom line. So here we went from $350,000 in what we sold, went through what it cost us to operate, paying Uncle Sam his share. We made $11,000 profit. Okay. Does that mean $11,000 went in our pocket? I think, Renisha, I'm going to put you on the spot here. Do I put $11,000 in my pocket? Okay, I won't embarrass you, but I figure it's just us here, so I'll pick on you a little bit. So we made $11,000 net income. We're going to talk a little bit more about what that means. But next, at the end of the year, we take our net earnings, our net income, and we move it to the balance sheet. We move it to retained earnings on a balance sheet. Okay. Again, the balance sheet, it's a picture in time. Okay, it doesn't reset every year like the income statement does. It's just a set picture in time. It shows the cumulative result of our business from the beginning, and it sustains the business for the long haul. Now we know that if we got a very weak trunk, very weak roots, and weak branches on our apple tree, what's going to happen? Again, if you don't have a solid balance sheet, if you don't have a solid trunk of your tree, you're not going to get very many apples. We're not going to get very much net income. So we want to have a solid balance sheet and think of it as the support system that gives us the apples. And think about if you have an apple tree where the trunk and the roots are all diseased and all rotted, how many apples do you think you're going to get? And think of it as your balance sheet. If you don't have a good, solid balance sheet, is it possible for the business to really make money? So the balance sheet, it talks about what you own and what you owe. Again, what you own, those are going to be called assets. And what you owe is liabilities. So what you own versus what you owe is going to be your equity. And sometimes equity is called net worth. When people talk about what's your net worth, it's what's everything you own minus everything you owe, and that's basically your net worth. In a business, we're going to call that equity. So if we look at a balance sheet, again, coming back to our winery, here's our balance sheet. Anytime we see the word current, I'll say Christy or Renisha, either one of you, what does current usually mean when we see current assets?
Basically what you have at your possession.
It generally means within 12 months.
Okay.
What's due within 12 months? Okay. So here, cash. I got $25,000 cash. I own that. Accounts receivable. Anyone know what accounts receivable is? Receivable. Whenever you see receivable, you're going to receive money. Somebody owes me money. I sold Terrence a couple cases of wine. He hasn't paid me for it yet. Okay. So his sales number is in my revenue, but he hasn't paid. So he owes me, oh, wow, TC, you owe me $38,000. You drank a lot of wine last month. So receivable, something that I sold, I haven't been paid yet. So I'm going to receive money. So do I own that? Is that an asset? Okay. And I should collect it within 12 months. My wine inventory, again, I got a store full of inventory, about $285,000 worth of wine. I own that. That's an asset. Other current assets, it could be certificate of deposit, could be a lot of other little things. So my current assets, $358,000. These are assets that can be turned to cash within 12 months. Okay. And then I get to property and equipment. My store, I spent $325,000 on equipment for the store. And then we have accumulated depreciation. Now, I may have bought fixtures and refrigerators and stuff my wine store. I paid $325,000 of it. I consumed $15,000. This is how much of it I wore out. And Ronisha and Christy, do you understand depreciation? Or do we really need to discuss it and talk about it? Again, I'm happy to go as far in depth as we need to. Are you comfortable with depreciation? Ronisha, you're muted. You're still muted. I see your lips moving, but I don't hear anything. You could just press the space bar and it would unmute you. No, still can't hear you. Okay. All right. We'll just talk about depreciation is how much of it, your refrigerator, your fixtures and stuff wear out over time. So I want to take an allowance for how much of it we used up, how much of it wore out. Okay. So it's my accumulated depreciation. So my net, the book value of my property, plant, and equipment is $310,000. It doesn't mean that's the market value of it, it just means that's the book value. That's what I'm putting on my bookkeeping that I own. And then any other assets could be just a lot of miscellaneous things. So my total assets are $678,000. So this is everything that okay, Renisha, I see you raised your hand. Wonder if I could, you having trouble unmuting yourself? Okay. All right. Okay. Well, did you have if you have a question, there's a chat room. Oh, you are in the chat room. I need to pull this up. Okay, I see you. Let me keep the chat room open then, since you can't speak to us. And then this is the listing of everything we own. Now we come down to current liabilities. And just like current assets is what we're going to get or turn into cash within the next 12 months, current liabilities is what we have to spend within the next 12 months. So we got accounts payables. Well, receivables is when people owe us money, we're going to receive it. Payables is we owe money. So in this case, let's say $10,000. Let's say I got a shipment of wine come in, $10,000 worth of wine. I put it in inventory, so it's in this inventory, but I didn't pay it yet. I owe somebody $10,000. Okay, so that's going to be in accounts payable. Credit line, that's my credit card. I ran up my credit card. I got $25,000 on my credit card. I have to pay that within 12 months. And then I got long-term debt. I borrowed money in order to start my wine shop, but I have to pay $76.50 of the long-term debt within the 12 months. So that's why I took $76.50 of it and moved it up to current, because I got to know how much cash I'm going to need in the next 12 months. So I can look at my current liabilities. Then I got long-term debt. So I can look at my total liabilities. So you can see this here is what I owe. So I now have what I own and what I owe. So my equity is my accumulated earnings. So I got $435,000 of equity in the business. And the liabilities plus the equity is always got to equal the assets. If you notice, the assets, liabilities, and equity are always going to be the same. That's why it's the balance sheet. We have to keep this in balance. And accountants, and Renisha and Christy probably know what I'm talking about, you spend hours and hours and hours looking for just a few dollars trying to keep this in balance. And it gets to be very, very frustrating. It's very important to keep it all in balance. Well, you know, we haven't had any rain in quite a while here in East Tennessee. And I know some of my plants are struggling. Without water, what's going to happen to your apple tree? You know, it's not going to do very well. Without cash, what's going to happen to your business? Just like your apple tree needs water, your business needs water too. And here your water is cash. So cash flow statement. Where did the water go in our business? We made $11,000 net profit. How come I didn't put that in my pocket? Let's look at it. We want to look at how much cash was consumed by the income statement out of our apples that we sold. How much cash was consumed by the balance sheet? Okay, so really we're saying the cash is the water that's supporting the whole system. So we look at it, the cash flow statement is what connects the income statement and the balance sheet. So really the cash flow connects these two. And this is a lot what Ron was talking about last week about how the two really gets connected. Okay. So if I produce net income, we made $11,000 net income last year. Where did the money go? How come it didn't go into my pocket? Again, the answer is going to be in the cash flow statement. So we look at it. Okay, here is our balance sheet, and here's now our cash flow. So I look at cash flow from operations, my net income, $11,000 of net income. My accounts receivable, if you look from the year before to this year, my accounts receivable went up. Okay, more people owe me money than they did last year. So it went up by $3,000, which means I have $3,000 more owed to me than I did last year. That consumed cash. Okay, that's cash I didn't get yet. I made the sale, but I didn't get the cash. Current assets, $9,000. Well, look at current assets. We had 19,000. It dropped to 10. I sold $9,000 worth of assets. I probably had some old fixtures or old refrigerator I had in the store that I sold them. Okay, so I sold them for cash. So I got plus cash, plus 9,000 in cash. But then look at inventory. You come down, I went from 270,000 in inventory to 284,000. I built inventory. I had can I make it larger? Renisha, you mean make the screen larger, or? I don't think I could do that on this side.
Do you see anything at the bottom right, down at the bottom right, that gives you that option to, or you might have to go out of full screen to be able to do it first?
Yeah, see this, because I'm sharing my full screen.
Right, so exit full screen for a second and then look at the bottom right and see if it give you that little thing down there where you can increase your screen size.
Yeah, I don't think it's going to help it in my presentation mode. Let me see. Yeah, it didn't change it in the, let me get back to work.
Are you in the PowerPoint, or are you out on the computer screen?
Yeah, right now, my computer, it is showing full screen.
Right, yes. So exit full screen. And then in your bottom right-hand corners, see if you're
Yeah, I put it up, but it goes on my screen, but when I'm in presentation mode, it doesn't give me that option.
Ah, gotcha.
Again, we could email, and actually, TC, if you got the PDF of this, you could go ahead and email it out and people could follow along if that helps.
I can do that. Absolutely. Definitely. Uh, Christy, if you'll put your email address in there, I got Ronisha's already. If you'll put your email address in there, I'll shoot it to both of y'all right now.
And then I'll hold for a few minutes till everyone gets it. Then you could open it up to this.
I'm gonna go ahead and go to my email. Okay, there you go, Christy. Okay, you all both should have that soon. I just hit send.
Okay, thank you.
Not a problem.
Yeah, let me know when you get to this page.
I have it.
Okay. Renisha, you there? You just shake your head. We good?
Good on my end.
All right. Okay, come back here to inventory. If you look, we went from $270,000 worth of wine to 284. So I bought a lot of inventory last year. I had to pay for that inventory. It cost me almost $15,000 in increase of inventory. And then if you look at my accounts payable, I went from 2,000 to 10,000, which means I owe people $8,000 more, which means I got something I haven't paid for yet. That's actually positive cash. So my operating cash flow, my cash from operations, a lot of people call it, is $10,150. That takes into account my net income, my increase in accounts receivable. I sold some equipment, increased my inventory, and I still owe people money. Net out, that's $10,150. And then we look at investing. Look at other assets. Okay. See here, I had 17,000, now I have 10,000. Again, I'm going to assume it's like a certificate of deposit at the bank that I cashed in. So that was positive $7,000. I turned that into cash. But to look at my property, plant, and equipment, I had 297, now I have 325. So I'm guessing I sold some old equipment and bought some new equipment. And that cost me another $18,000. So I upgraded my store a little bit. Remember, I sold some of the old stuff here and I replaced it with new stuff that cost more. So my investing consumed $11,000. Okay. And then my financing, my long-term debt. If you look at my long-term debt, I went from 225 to 200. Of course, I still have this to it. So my long-term debt went down 18,350. I paid off some of my debt. However, my credit card went up 15,000. And that's because I didn't talk to Christy, my financial advisor. Christy, you didn't tell me I shouldn't pay off my long-term debt with my credit card. That wasn't very smart, was it? Okay.
Oh,
But that's what happened here. So I paid off long-term debt, but then I borrowed more against my credit card. So for financing, I actually consumed $3,000 worth of cash. If you look at the beginning of the year, I had $29,000 in cash at the beginning, to where now this year I have $25,000. I've lost almost $4,000 in cash. So even though I made $11,000 profit, in reality, cash, I'm $4,000 in the hole. So everyone kind of see, just follow along on how we got there. And this is why it's so important for people to understand this cash flow and how it ties the income statement to the balance sheet. Again, operating cash flow, cash from operations. And again, if you look at public companies and you look at their financials, they call it cash from operations. And then our investing, this is what keeps the business running. Got to keep making investments in the business, to cash in the bank. So you can see here, even though our business was profitable, we had negative cash at the end of the year because of some decisions we made with remodeling the store with property and equipment, building inventory and stuff. So that consumed a lot of our cash. Any questions on this from either of you? Okay. So if you look at our different cash flow elements, again, if we look at our income statement, we got revenues. How much money did we bring in? What were our expenses from cost of goods, depreciation, debt, operating expenses? Paying Uncle Sam net income. So we take our net income, comes over to cash flow, and we look at operating. So we take our net income and we add back depreciation. And this is probably, again, to the most confusing part about cash flow. Depreciation is a non-cash expense. I'll say, the accountants will correct me on this, I'll say, it's paper money, it's money on paper, okay? It does not consume any cash. You already own the equipment. All we're doing is taking a financial charge for how much that equipment was used up. So it's not cash. So we get to add depreciation back in. And then we look at investing activities. Any capital investment, any new equipment we're buying, it's going to be negative. It's going to consume cash. If we sell any of our assets, it's going to be plus cash. If we sell assets, we talked about book value. If we sell them for more than book value, we have to pay income tax on it. If we sell it for less than book value, we get to take an income deduction for it. So there could be a gains tax, could be plus or minus. Again, we may have to pay a tax, or if we sell it for less than book value, this could turn into a tax refund. Investments in working capital. I'm going to talk about working capital in just a minute. Working capital is an investment, so we have to account for it. It consumes cash. And then working capital recovery. Again, we invest in working capital, we should recover it later, and that will be plus cash. And then financing. We borrow money, and then we have to pay it back. So borrowing money would be plus cash. We get cash. And then paying it back is going to consume cash. Let's talk about working capital. And with SCORE, I'm going to say one of the biggest problems we see with our SCORE clients is not understanding working capital and how that all comes together. Again, we talked about cash, accounts receivable, and inventory. How much of that do you have to have for day-to-day operating? Okay. And how do we treat it? Just like an investment, it's like a capital expenditure, except we do not get any depreciation. Let's go through real quickly with a working capital explanation. So here, my price, I sell my product. I'll just stick with wine because that's what we've been talking about. Let's say I sell it for $10 a bottle. And I'm going to assume I'm making the wine. So I sell it for $10. To make a bottle of wine, it costs me $2 in labor, $1.20 in material, and 80 cents in overhead. So it costs me $4 to make a bottle of wine. I sell it for $10. So what's my gross margin? Right? It's $6, right? It cost me $4. My cost of goods sold is $4. I sell it for $10. I make a gross profit of $6. Let's say I sell 833 bottles a month. I want, in my store, I want to have a 2-month supply of finished goods. Again, a lot of times you hear them say you can't sell from an empty wagon. You know, if TC walks in my store and my shelves are empty, what's he going to do? Is he going to place an order and wait 2 weeks for it? No, he's going to go next door to somebody else. So I want to have 2 months supply of finished goods. Raw materials, I want to have 1 month supply of all the raw materials I need to make the wine, bottles, grapes, etc. Accounts payable, because I sell to a lot of local restaurants and stuff, I give them 30 days to pay me. So I'm going to assume I've got accounts payable that I sell the wine today, I get paid in 30 days. Does that make sense? A lot of business to business have terms. A lot of it is, you know, I give you the product today, you pay me in 30 days, 60 days, 90 days. Here I'm going to assume 30 days. My accounts receivable, when I buy things from my suppliers, I tell them I'm going to pay them in 60 days. Okay, so when I buy my bottles, my empty bottles, I tell my bottle supplier, you send me the bottles in 60 days, I'll pay you. So now I want to come up and say, how do I figure out the working capital? How much investment do I need to make this work? So here, current assets, accounts receivable. I do 833 units a month for 2 months. Remember I said I want I'm sorry. What did I do here? Accounts receivable. Oh no, I explained this backwards. Payable. I have to pay my suppliers in 30 days. And I told my restaurants they have 60 days to pay me. I'm sorry, I had that backwards. I didn't read it close enough. So when I sell my wine to the restaurants, I give them 60 days to pay me. Okay? So 833 units a month times 2 months at $10 a bottle, they owe me almost $17,000. Okay, so that's my receivable. Finished goods inventory, I said I want to have a 2-month supply. So I need 833 times 2 times $4 because my inventory is based on my cost. Here, I sold it. So this is based off the sale. This is what they owe me because this is what I sold it to them for. The inventory is based off the cost. I have to buy it at cost. So finished goods inventory, 2 months of finished goods inventory is going to cost me almost $7,000. Raw material, I said I'm just going to have 1 month at $1.20 for the raw material. So I'm going to have $1,000 worth of raw material. Now on the liability side, I said I'm going to pay my suppliers in 30 days. So I got product that came in, my raw material that came in, 30 days worth. I don't have to pay for it yet. So I could offset the $1,000. So altogether, I need $23,333 in working capital. And that covers my receivables, my finished goods, my raw material inventory. So I have to make sure I have this much money when I start up my store to stock my store or to start my business. And Ronisha, I'm going to think too that for your janitorial service, you got to have cleaning supplies. You got to have, I'm going to make this up. You got to have brooms and mops and spick and span and soap and stuff. How much working capital do you need to have this before you go out on the job? So you have to already have this in place, okay? And I love to use the example. And Terrence, I'm going to pick on you, okay?
Sure.
Terrence, I don't know if you know this about Terrence, but he makes his own beer. Okay? I'm making things up, Terrence.
Got you. Go ahead.
The buyer at Costco accidentally runs into Terrence's beer and says, Terrence, this is the best beer I ever had. We want to put it in our Costco store. What do you think? Ronish, is that good?
Yes, I like that idea.
Oh, yeah, TC. Oh, yeah, he already sees dollar signs. Costco.
Yes,
Costco's got what
absolutely.
about?
That's right.
Yeah. Now, what do we know about Costco? Are they just
Volume and bulk.
they buy in bulk? They want a skid. They want a whole skid of beer. Okay. There's 1,200 Costco stores. That's 1,200 skids of beer. Okay. TC, you got a pretty big garage, don't you? You could store all that?
It ain't that big.
Ain't that big. All right. Well, anyway, so TC's all excited. And he goes out and he goes to Renisha and says, hey, Renisha, I need to buy some supplies from you. You know, I need malt and I need barley and I need bottles. And Renisha says, hey, TC, you're a great friend. So I'll ship you all the materials you need. Pay me in 30 days. Sound like a
Like
big
90 better, Anisha.
Yeah, but Renisha's giving you a break. Okay. Okay, so all this, so these truckloads of product shows up at your house, TC. Where are you gonna put it all?
Got to rent a storage place.
Oh, it's okay. So you better go rent a place to do this.
Yes.
And how long does it take to make beer?
That's a
We
good
make
question.
1,200 pallets of beer. And keep in mind, a semi truck holds about 40 pallets. So what's that, about 300 semi trucks?
Good Lord. I'm going to have to sub this out.
Okay. All right. So anyway, TC goes out, he rents a warehouse. Oh, did you have to pay for that warehouse?
Yes.
Did you get any cash from Costco yet?
No.
Okay. Now you need some help. You can't make this yourself, can you?
No.
All right. Well, I think Chrissy, Ronisha, and I, you know, we're all pretty good buddies. We'll come help you out.
All right. I appreciate it.
But I get paid every Thursday. Okay. So we're working, and every Thursday you give us a paycheck. Did Costco give you any money yet?
Not yet till I deliver.
Not yet. So this is going on. Finally, after a few months, we get it all done. It's all ready to go. The truck pulls up. It ships off to all the Costco stores across the country. You go, wow, my gosh. You lost a lot of sleep over that. You had, in the meantime, Renisha says, hey, TC, your 30 days are up. You got to pay me for all the materials. Costco give you any money yet?
No.
Okay, so the truck finally leaves the dock. It's gone. You had to pay for the materials. You had to pay for the warehouse. You had to pay for the labor. Costco says, Terrence, thank you very much. This is fabulous. We'll pay you in 60 days. Now, when that check comes, now you're going to, pop the champagne. But can you survive until the check comes? And that's where so many companies get in trouble. Sometimes the worst thing that can happen is you get exactly what you ask for.
Yep.
Get that Costco order and you don't understand how that cash is going to work. That's why it's so important you go through this and you analyze what is this working capital going to be? And that is what your investment is going to be. You have to make this investment of working capital up front. Ronisha, if you get a big, huge cleaning contract, you have to make this investment up front before you get paid for it. Okay. And I'm sorry, Christy, I can't think of an example for you, but, and this is what gets a lot of companies in trouble. And I always say, can a very profitable company go bankrupt?
Yes.
And this is exactly how it happens, is they don't monitor and they don't plan their cash.
Would this be a good, I think, and if you don't mind me interjecting here, because I've got a situation where not this exact thing, but there is a gentleman who has a order of produce to fulfill. He has the wherewithal to get the produce manufactured, but he needs $127,000 because it is an import-export situation. So that adds another layer of complexity, getting your money from a company in Canada when you have your company getting this product from Africa, and all of those, they've got different customs and different laws on those type of transactions. And you're in the US and you are stuck between Canada and Africa.
Yep. Okay. Are you working with Mr. Minter on this?
No, I am not.
Okay. Sounds like a Doug Minter problem. I did a lot of work with Nigeria doing exactly what you said. And you're right. It creates a huge amount of issues.
But I didn't know you did that. I might call upon you there before I make a decision on whether or not we want to have $127,000 at risk, and we got Canada and Africa. And anything could go wrong.
Yep, you're right. A lot could go wrong. But these are the things I look at, and I'll tell you, the company that I retired from, when I started with them, they were about a $7 million company, nearly bankrupt. When I retired, we were over $200 million company, almost bankrupt. We would grow so fast in cash flow every day. Our focus was on cash, cash, cash. You would think a company that size wouldn't worry about cash, but when you're growing, and there are times we were growing 10% per month, it consumes huge amounts of cash. And we spent, I would say, a big portion of our time trying to manage that cash flow to keep the company going. And I say that as an entrepreneur, we have a bunch of people working for you. Usually everyone loves payday, except the owner of the company. Because everyone gets a paycheck but you. And you got to worry about, and back a while ago, I owned several businesses, but once I had a business, I literally had to go out and get a part-time job to make enough money to pay my people in the business. And so you have to do things like that and really manage your cash flow and keep an eye on making sure you could finance the next month's activities. So really, you got to think about cash, new investments, your disposal of existing assets. How are you going to balance that? Your salvage value, working capital release. Eventually, TC got the check from Costco. So he got that release. So you got to plan that. The one thing I love working with Costco, Costco pays 60 days. You will not get a check day 59, and you will not get a day 61. Costco says 60 days, you get exactly 60 days. They do exactly what they say they're going to do. And they're great people to work with, but they pay in 60 days. Cash revenues, operating expenses, maintenance costs, interest, loan payments, taxes. Uncle Sam doesn't like to wait. When you owe the taxes, they need to pay it now. And then the non-cash items, depreciation and amortization, these do not consume cash, even though they're on the profit and loss statement. So really, we want to do project cash flow, again, becomes the most challenging part of the economic analysis, to see how the cash is going to flow. And Anisha, I imagine a big part of your job in underwriting is trying to follow how's the cash going to flow. I know the P&L statements, the balance sheets are very important, but the key is cash flowing. Doesn't matter how good your apple tree is. You can have good, strong trunk, beautiful apples. If it doesn't rain and it doesn't get water, that tree's going to die. And that's got to think about cash flow. You got to look at operating, investing, and financing. These are the three elements we really have to focus on. So again, if you look at your apple tree, you got your income statement, your balance sheet, and your cash flow. Your success requires a focus on all three. Now, I know in Christy, Renisha, both, there's a lot of other financial statements to get involved. I always say those are for the accountants and the finance people. As the business owner, you have to know and understand these three statements, and you have to be very intimately involved with understanding this. And with SCORE, I'm working with clients that have million-dollar businesses. They're bringing in over $1 million of revenue, and they don't understand this. And I just kind of shake my head and says, they don't even know if they're making money. They just know what their sales and stuff are. It says, how can you run a business not knowing this? So the key is you have to know, understand, and if you don't, so many businesses, the accountant gives them the statements and they put them away in the drawer. So no, you need to sit down with your accountant and go through it in detail, understand every single number, understand how all these flow together, because that is the life of your business. And I will do a real quick commercial for SCORE. Christy, I know you know SCORE. We've worked together already. Renisha, I'm not sure if you're familiar with SCORE. We do training, workshops. There are 52 of us here in East Tennessee, all different backgrounds. Terrence, we're pretty expensive though, isn't it? Isn't SCORE real expensive to deal with?
Yeah, that $0 thing is just, man, yes.
Well, but we doubled our rates this year.
Doubled it.
You doubled it, yeah.
Gotcha.
So absolutely.
100% increase of zero.
Yep. All of us are 100% volunteer. We don't have anyone in Knoxville that's paid. We all volunteer because all of us have a passion for the small businesses. And we feel for East Tennessee to really get economic, stable and viable, it's in the small business. So we basically volunteer our services. All of us are previous business owners, business executives. And if you go to score.org, they will set you up with a mentor, absolutely free. And we go across our network of mentors to find someone who could fit you and fit your businesses. So please reach out to us if you need any help with anything. In TC, I also reach out to any of your clients if you need any help from anything. You know, we're always here for you.
I greatly appreciate that, my friend.
So that is what I had for today. I hope it's what you're looking for and was helpful. Or was it, Ronish, I got to ask you, was it too oversimplified? Of course, you can't speak, so.
Do the chat answer. And Christy, I wish you would answer that as well, because it's good to gauge, and you all have an experience. It's different from somebody who we might deal with that don't have any type of background in accounting or bookkeeping and terrified of numbers. Almost everybody we run into, it's like kryptonite.
Yes, and just like you said, the presentation was clear and straight to the point, and it wasn't oversimplified for me because I understood everything that you said. So thank you. And like you said, Terrence, going back to the people who you serve, especially in the line of work that I do, I see the same thing. So yes.
Right. So out of curiosity, what does it take for those people who need it the most? What does it take for them actually to sit down for 45 minutes and invest that time in something like this? What does it really take for them to do that? Is this the wrong time of day? Is it too long, too short?
Well, it may be around the time, maybe.
Okay.
Because this is needed. I mean, like you said, just from the people we work with daily, this is something that's really needed. I think even from my experience too, I know there's like a lot of people, of course, they want to focus on their passion, but when it comes to things like this, it's like, they know they need to do it, but it's like, I don't have time to do it. I rather have somebody else doing it for me, or, what can you do to help? Because I get a lot of that, it's like, and then I think even too, you know, when you thinking about this type of thing for people, I think a lot of people can't really comprehend it.
Mm.
That's what I run into too. So it's like, you know, and even for me, you know, just starting out in this, which I really haven't started yet, but I am working with a few people on the side, you know, it's like, I'm going to teach you how to do this. I don't want to just do this for you, you know, because I'm not going to be around, you know, probably for a long time. So I
Right.
want you to be able to learn this. And even just looking at it from a personal standpoint, that's how I teach people. But it's all about the mindset too. So I think, you know, once we really sell it in a way to where it's like, oh, I really do need to understand what I'm doing here. I think that will make a difference as well, because even from the personal side, I know this with me, I have to really change the mindset and help people see it from a different viewpoint so they can see the importance of it.
Right. Gotcha. And Ronisha, yours is something they have to want to do. Many people run when they are not familiar with the process. And when you say process, are you referring to process of setting up books, process of keeping up with books, or I'm sure probably both, but it's easier to have someone to do it. And I agree with you on that, but to Floyd's point, even though that is true, these three financial statements, even if they don't know how to do them, they need to understand how they operate and how they connect to each other. Because when people that you're walking into and you're asking them for money, they're going straight to the numbers. They're most of their questions are going to be right off the top. Tell me about your margins. Tell me about your expenses. You know, tell me about your. I mean, they want to know what those numbers look like. And when you are then when our people demonstrate that they don't know what those numbers are, that's a very short conversation. And even, I mean, I had a client in here earlier talking about this exact same thing, went through all of the stuff that she knows she needs, was going to send her a link to this, and Lord behold, she doesn't show up.
Well, and also I would say, I have a client who has a very successful business, and we found one of his employees stole about $300,000 worth of product over the last couple of years. And we went back to the financial statements, it showed up, but nobody was looking at them. And nobody was questioning it.
Yeah.
And then once it happened, and once the guy got caught, then they went back and started looking, and all the signs were there. But because nobody was looking at it. And again, I don't expect them to make the statements. You know, that's what they have accountants for. That's what they have a CPA for. I expect them to understand it when the statements come out.
Yeah.
So,
well, we'll live on to fight another day.
Yeah.
And just keep trying to. I mean, I don't really do any chasing. I do try to make sure opportunities and knowledge is available, and we have people that are, whether we are in-house or we are bringing in out, you know, people from our core resource partner group, but at least we're doing our part. And I guarantee you what will happen is we will have all of these bid opportunities and all these businesses lining up at the door, and we won't be able to help one of them because they've waited till it's time to play the game, and then the game has started and everybody else is already off to the races. You doing that? I can't shoot. All I can see is your red thing on your microphone. Put it in the chat box. I heard people say I'm not good with numbers. Oh, okay, gotcha.
Well, we may not be good with numbers, but all of us are good with money. And Ronisha, do you want to have Terrence control your money for you?
So they run from the setup, got it.
Yeah. But it's not numbers, it's money. It's your money. You're gonna let somebody else take care of it?
Yeah.
Yeah. Now me, yes, I'll let TC do it because he's a trustworthy guy, but that's not always the case.
Yeah, but I like the fact that you lifted that example though. That merchandise is money, and when you go back to the books, you see that that's what got you in the red. I mean, $300,000 worth of merchandise to lose, that's a lot of money to lose.
It's a lot of money.
Yeah, unfortunately. Well, I won't keep you any longer. Appreciate your time. Appreciate you being here, Ronisha and Christy. Floyd, appreciate the excellent presentation. I'm going to always have you to do that just because it is so simple to follow. And that is the first part. And if people are really then want to go from there to get into the weeds, we're always here for people in the weeds. You just got to reach out to us.
Okay. Nisha or Kristen, if anything you need, reach out. We're here for you.
Yes, I will. Thank you very much. This was really good.
Thank you. Thanks for
Guys, have a good night.
Thank you. You too. Bye-bye.
Goodbye.